What's up, everybody? It's Ryan McCrary, the most relatable financial coach and entrepreneur you will ever come across. Today, I want to talk about actively managed funds versus passively managed funds. So, you may be saying, what is this? This sounds like a foreign language to me, but I will break it down to you very simple. Disclaimer first, number one, I am not a financial advisor. I do not give specific advice or recommendations. I am not licensed anymore. I had my securities licenses in prior years, but I am not licensed, nor do I want to be on giving advice, tips, performance, anything of that nature. So I do not give investment advice, stock advice, anything. I just give general information on what this stuff is, not exactly what you should do, what I recommend. I can tell you what I do, but I'm not licensed to give a recommendation. Having said that, I want to talk about the difference between actively managed funds and passively managed funds. We're talking about mutual funds, guys. Mutual funds is an investment in which you invest in a fund that has multiple different securities, whether it's a stock, whether it's a bond, but it's something that is diversified. So it is less risky to get into a mutual fund than get into an individual stock, because if you put all your money in Apple and Apple tanks for whatever reason, I don't think so because it's Apple, but in that example, in any case where you put all your money into one thing and that thing goes down, you lose all of your money, as opposed to getting in a mutual fund where you're in multiple different stocks. If one or two companies goes down, you're still in a broad base of other companies, so you will be less risky, and your money, you won't lose all your money because you'll be in multiple different investments and you'll be diversified. So when it pertains to mutual funds, there are actively managed funds and passively managed funds. Actively managed funds are where a financial advisor or some type of investment professional or portfolio manager, they actually manage the fund. So they go in and buy stocks on the stocks they think will do good in the market, that'll do well that year or quarter, whatever the case may be. So you have a portfolio manager that goes out and places the trade. So they buy this stock, buy this bond. They, put money on this. They think the stock market will trend in this way. And there are also passively managed funds that just track an index, like a 500 index that tracks the S&P 500, or a total stock market index where it just tracks the entire stock market. So it's just going off an index. No one is betting either way or thinking, the market will, go up this way or that way. This stock will do this or this stock or that. It just tracks by the market, by the S&P 500, or by the stock market, whatever type of index is tracking. And generally speaking, usually, most of the time, passively managed funds do better. I'm gonna repeat that again so you get it. Most of the time, not 100% of the time, but an overwhelmingly majority of the time, passively managed funds outperform actively managed funds. Well, why is that? Because number one, no one can predict the market. I don't care what advisors you get. I don't care who you get on CNBC, Jim Cramer, whoever it is. No one can predict the market. And with passively managed funds, the fees, the management fees and stuff like that are a lot cheaper because you're not paying a physical person to actually go out and manage the investment. So if you have a cheaper fund or cheaper investment where you pay a lower expense ratio and a lower management fee for the investment, even if the actively managed and the passively managed have the same returns, you'll get more money in the passively managed because the fees are a lot lower. A lot of this is talked about in this book, Money Master the Game by Tony Robbins. If you haven't read that book, I strongly suggest you read that book. I actually knew a lot of this information already just working in the industry. He actually interviews John Bogle, the founder of Vanguard, who's like one of the greatest investors and wealth managers of all time. I actually seen him, met him a couple of times. So I've worked in the company that's like high level in its information. So a lot of information I already knew, but it was a great refresher and a great information of stuff that I didn't know. So I suggest you get this book and read it if you haven't. It's about 700 pages, but it's worth it. Money Master the Game. Also, let me know what books y'all are reading. Please drop it in the comments. I love to know what books y'all are reading. If it's not a book that I've read, I'd love to pick it up. Also, I think it's important just to have this dialogue around reading and the importance of reading and sharing resources, because reading is crucial. Reading is crucial. A lot of people come to me all the time on a daily basis of like, I'm trying to make some quick money. I need to flip some money real quick. I'm trying to make more money. Like, I'm tired of being broke. Like, how can I make more money? And I'm like, you're thinking about it the completely wrong way. You talking to, you're thinking about some quick flip. You're thinking about some quick hustle. You're thinking about get rich quick, all that type of stuff. Like that stuff, 99.9% of the time does not work. So if you want to make more money, I ask, how much are you reading? If you want to make more money, I ask, how much are you reading on a daily basis or weekly, monthly basis? How many books do you read? That's simple. Damn near everybody has a smartphone. So that's number one. That's number one. If you want to make more money in 2019 or 2020 or whenever, number one, get in the habit of reading. That's the thing that anybody can do, and I guarantee you it will drastically impact your money. It may not be overnight if you read a book and then the next day you're going to have the extra $10,000. No, but get in the habit of learning, of reading. You want to make more money. How many books are you reading about making money? A lot of people think about making money. I'm going to go out and apply to 100 jobs, hope I get hired. Why don't you read a book on how to make money? Very simple. So read this book. I read this end of last year. The book I'm reading now is, I just finished reading this book, Clockwork, Design Your Business to Run Itself. An excellent book. I just read this. This is the new book I'm reading now, Platform Closing. Basically, how to speak from the stage, stuff like that. I want to start getting speaking engagements. That's the book I'm currently reading. But let me know what books y'all are reading. But again, actively managed and passively managed funds, it's important to know that, because for the average investor, for the people who haven't worked in the industry, even the people that work in the industry, even financial advisors, a lot of them still don't know about this. They still don't recognize the importance of having low fees, passively managed, get a fund that tracks the index, because it gives you the potential for the greatest return. The main goal of investing is to get the best return on investment. So being in something passively managed, something with a low expense ratio, something with no loads, that is literally, it talks about in this book, and you can get hundreds of thousands of more dollars just by being in something tracking the index, just by paying, a 0.5% of fee, as opposed to someone paying a 2% fee. It translates into hundreds of thousands of dollars, even possibly millions of dollars over the long term. So I hope this was helpful. Let me know. Any other questions, feel free to drop them in. I'm trying to share more information on just stuff that I learned, that I read, that I've experienced, to just give back, to help you make more money, get more financial freedom in 2019 and beyond, because we need to be having these conversations. We need to be cognitive of this, because a lot of people just have the consumer or spender mentality when it's like, you got the money, all you got to do is reshift those dollars into investments and mutual funds and, index funds and stuff like that, as opposed to shopping at Foot Locker and, eating fast food, every other day. So hope it was helpful. Let me know. Drop a comment name, drop your name and where you're from. Have an amazing rest of your day.